Good morning. As the markets prepare for Yellen's late afternoon speech, what happens today? Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:07 a.m. Central Time, and I am recording this in preparation for the market day of March the 27th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see what happened in overnight action. Well, it's essentially scratch for the broad market indices, at least. In fact, all four broad market indices are hardly more than a few ticks off of yesterday's close. Not the case, though, for crude oil. Crude oil was down nearly $1 or 1.77%. Let's see, we have Euro also down about 1/4%. Bonds up about 1/4%, and gold down about 5 points or almost 0.5% at the time of this cut. In terms of overseas action, obviously they're not as directly impacted by whatever Yellen may say at the end of today's trading day. China up 1/4%, Hong Kong scratched, Japan down about 1%, Germany is up about 0.5%, and the United Kingdom down about 1/4%. So, in terms of macroeconomic reports for today, we do have a GDP, they call it the final, that will be coming out here in just a few minutes. And then during the market day, we have the University of Michigan Consumer Sentiment Report, so be aware of that. But most importantly, we have Fed Chair Yellen speaking today at 3:45 Eastern. This is going to occur literally just a few minutes before the market closes. If you look at her subject for the speaking engagement, it definitely opens up the possibility for some volatility coming in. The subject she's addressing, as well as the fact that apparently there is a forum in which people will be able to ask her questions. So a lot of people are pointing to this as an opportunity for some volatility to come into the market. Some of this may occur after the market closes, and that fact also will make some traders very uneasy. So there's likely to be a lot of covering and going to cash positions, or at least hedging activities prior to the start of the speech this afternoon. So today's close may be a little bit unusual from the typical close sequence that you get going into a Friday afternoon, both in its movement as well as the timing, with her speech starting 15 minutes before the cash close. In terms of volatility, we have obviously the short-term VIX has been climbing. We're up at a 15.92, and you see the relative volatility measures for the other indices as well. Historic implied IV percentiles, obviously you've seen these starting to climb in the last couple days. We did not have any kind of standard deviation moves yesterday, so after the huge moves, and remember, a 3 standard deviation move, I mean, this is supposed to occur perhaps one in every 100 trading days or something like that. So this was a very, very big move the day before. So yesterday was much more of an inside. In fact, we had spinning tops on broad market indices on several of them. So that means we have a potential reversal signal given by the candlesticks, but it needs confirmation. And obviously when you look at the overnight action, it doesn't look like we're set up to start that, but obviously there's still time to go before the market open, and that GDP report itself could reset everything just here in the next about 15 minutes or so. Okay, so let's take a look at our regular daily report. Continued weakness coming in, and then certainly while this phase 3 opinion still holds, it's higher highs and higher lows with some caveats. You know, we've had a lower low and not yet set the most recent higher high. We continue to be concerned by that. But certainly there's other things to point to that are much more significant right now. Portfolio investor posture has a couple concerns. We've got IBD status, uptrend under pressure. We had the GMI index is dropped all the way down to a 2 out of 6, though a buy signal is still in place. Active trader market posture has gone all bearish, and we'll get into that in more detail in just a second. From position sizing opinions, you have the investor opinion as long side portfolio exposure up to 50%. Volatility based opinion is still at up to 100%. In fact, that's one of the interesting things about this recent movement is that the VIX really hasn't respected this this concern at all. Our VIX readings have elevated from where they were, but they were very low, and we are certainly not out of the norm in terms of the VIX ratings right now. So certainly those that need to buy puts and so forth, they are not rushing for the exits. They are not fearful to any extreme degree at this point, and that could be something of a counter trend marker. Market timing opinion actually today and the 3-day outlook based on patterns and other studies is bullish. But you see the market forecast opinion, market posture is quite bearish. In fact, all 4 broad market indices are now in bearish territory and would give the opinion of no new short-term or intermediate-term bullish setups to be taken. Let's see here. Hedge warning level still remains as a level 1. You know, there's certainly we've had more evidence come in to justify an elevated warning status. Not enough yet to go to level 2, but certainly we still see from like our volatility measures, the market and decline warning has fired. We've had a sharp increase warning fire. You notice here, like we mentioned, the VIX is not above an 18, so that has remained relatively staid. Look at the distribution days, though. This is very high. S&P 7, NASDAQ 7. For those kinds of distribution day counts in a market that's not in a bear market posture is very high and very concerning. Let's see here. We have obviously the postures are all below an 80. That's a concern. We had a relatively high new low count on the New York Stock Exchange yesterday. Notice the new highs only 83, new lows 261. We generally flag this when it goes over 300, so it was coming into that environment. The key intermarket risk aversion indicators, all 5 of them flagging as risk off, so that also was concerned. In terms of the separate opinions, option income strategies, while the VIX is inside the acceptable window, I would suggest that you need to be very careful about initiating option income strategies at this time. We're been experiencing pretty significant number of distribution days, also a significant number of standard deviation moves, all while the VIX is relatively low, so you are not being paid for the actual amount of risk in terms of movement that you are incurring. So option income strategies require a very, very nimble hand to be successful with many of those right now. Covered calls, obviously an equal distribution between in the money and out of the money would be at the very least. And then put selling. This could be an environment in which these pull downs can be good setups to sell puts against your core portfolio basket of stocks that you are willing to own in the position size that you're willing to own. But you got to watch that position sizing. You might want to consider scaling in to where you have a position that you're wanting to build, and You're wanting to buy those stocks at a discount, and yet at the same time, it's not all in at one place. You maybe want to ladder it in as the situations portray themselves. And let's see here. Let's go down here to our sector analysis for the day. Market postures, you see a lot of red on the short and intermediate term. Not a lot of health left by any measure, though you could point to healthcare and retail as perhaps the two healthiest sectors in relative terms. In terms of asset class analysis, percent change, you see materials and information technology were the only two sectors that were able to squeeze out positive returns yesterday. So just because, for example, healthcare, just because it has been holding up better in general, still means you can lose money. And you notice the 1 day, the 5 day, and even the 1 month, if you were to hold healthcare, which indeed was very consistent for a very long period of time, you are still negative on recent activity, and really even in the last month you're scratched. So not an environment that's conducive to risking your assets, risking your trading capital. So you should be very, very cognizant of that at this time. In terms of the individual industry groups, retail, internet, healthcare, railroads, internet, and biotech, pharmaceuticals round out the top. And these should be the places where you're doing your work in terms of preparing for re-entering new positions as those opportunities present themselves. So as always, greatly appreciate you each and every trading day. Greatly appreciate you liking us on YouTube or on any of the social media platforms where you may be following us. And then, of course, additional information is available at the website, both about our daily price guide, day trader products, as well as any of the live trading rooms. Emails, of course, can go to support@falconglobaltraders.com. Disclaimers, as always, just hit the pause button if you need more time to read this, and then we'll see you same place, same time on Monday morning. Greatly appreciate you each and every day in the Falcon Global trading community.